Well, Frontline Indies is doing what they are with the mid-caps doing a lot better. Let's talk about the affordable housing space now. And this as the new cabinet expanded the Pradhan Mantri Awas Yojana, PMAY as we know it, to build 3 crore additional houses at a cost of about 4 lakh crore rupees. And also, the affordable housing finance scheme, or to increase finances towards affordable housing, both rural and urban, is something that there is a fair amount of thrust on. So to discuss this in further detail, we are joined by Varun Gupta, who's the director at affordable housing builder Ashiana Housing. Thanks a lot, Varun, for joining in. The first question obviously is, what proportion of sales come in from affordable housing for you? How is it that you define affordable housing versus what the definition under PMAY is? And what proportion did you get from PMAY 1, as it were?
Nigel, I'm sorry. I thought we were discussing our financial year results when I came in, and I would.
We will speak about that as well. We will speak about that as well.
I'll just specify. We are not really a affordable housing developer.
Right.
We do mid-market homes within, let's say, a 40 lakh to a 2.5 crore bracket, with an average about unit size of about a crore now. And we have lots of units in the 40, 50, 60 lakh bracket. Most of it actually does not qualify for PMAY in the earlier definition. Part of it did. I'm hoping that they will increase the income slabs and the home loan quantum that they were allowing for this, given inflation over the last 5, 6 years, 7 years since the last scheme was announced. We had lots of units qualifying for those for PMAY 6, 7 years ago. But I think with inflation and general increase in pricing across markets and sizing also across markets, this is something we don't qualify for.
Okay, all right. Hi, Varun. Good morning and welcome to the show. This is Nigel on this side. Let's focus on business then. For the past fiscal, you've done roughly around 1,800 crores. And I think in volume terms, it's around 26 lakh square feet. For FY25, how's it looking? Things have looked up. You've shown some good growth. Should we brace for a number of around 2,500 crores for this year? And what could it be in terms of volumes?
So, hi, Nigel. I would say we should cross 2,000 crores this year, and there should be roughly the similar kind of volume growth. I don't over this period. So we would expect if we cross 2,000 crores, it will be a good year. We ramped up significantly over the last 3 years. We have more than tripled in sales volume, and now continuing, as long as we continue to get double-digit growth, I think we'll be more than happy.
So if you are looking at double-digit growth with the same volumes, you're expecting realizations to increase by about 10%. Is that correct?
Yeah. So no, through a mix of it. So I would put it this way: I don't know whether we will have realization improvements or volume improvements. We have targeted sales volume of value of more than 2,000 crores. It will be driven by a mix of volume and pricing, depending on what projects do better and which markets do better. So I think, but we are more than confident to get 2,000 crores plus this year.
Okay, we asked that because we saw a little more than 30% increase in your realizations last year from FY23 to FY24. And over the last 4 years, if I look at it, it's more than doubled a little. So just wanted to know, what is the quantum at which prices can increase after a dramatic increase that we've seen already?
So a large part of the dramatic increase also for us, Nigel, has been change in mix of our markets and mix of our projects, where Gurgaon has started kicking in substantially more revenues than it was earlier, which is seen as a market price growth, and also it is priced in base prices also more than our general other markets. And also senior living has become a larger category for us, and senior living also we price higher. And that thing is probably played out significantly. Now increases in our pricing will be driven more by general increase in prices across the board. So therefore, muted price growth as compared to earlier price growths. But we will continue to see increasing prices because the real estate markets across are supply constrained. And till they remain supply constrained, I would expect prices to increase.
Okay, all right, Varun. So that was Mangalam. This is Nigel back again. Since you briefly mentioned senior living, the segment, how much does it contribute in terms of volumes or value? If you could help us out with that.
So it's contributing between 15 to 20% of the company right now in value terms, and we
Okay.
expect this to increase to a third to 40% over the next few years, as about 40% of our stock now is senior living. We are over investing in this segment because we expect this segment to do better, improving demand, improving margins, increased value for the customers by giving a much more differentiated product that services their needs. So all of that
Okay.
put together, I think senior living will get a larger focus from this.
Okay, you talked about 15% ROE as a target. This year you hit that number?
So we track ROEs on a two basis, on a reported basis. The reported basis, we have not hit the target of 15% ROE, but on an economic basis where we track, because reported profits come in as per deliveries, on an economic basis, we have more than crossed the threshold of 15% ROE. And I think we seem to be on good trajectory to also improve reported ROEs going forward.
Right. What about land acquisition? I remember you were looking for some land in Mumbai. Just wanted to know whether you've earmarked some amount for that. If yes, how much? And also the land in Kolkata and Milakpur, both were under sort of court orders. What's the update there?
From Kolkata, we have exited and we are from the transaction, and there we are looking just to get our money back from the counterparties there. And in Milakpur, the land remains under legal disputes, and we are looking to resolve that as we go ahead. But I don't have any sort of light to give on that when it can happen. At the same time, we have earmarked amounts for different parcels in different places, but it's flexible depending on where we get transactions. We are actively looking at the Mumbai external areas of Mumbai for senior living. We have been happy with the launch of Ashiana Amod in Talegaon, which is servicing both Mumbai and Pune, and looking for one more project in that corridor. And we continue to look for more senior living projects across the country in the future.
And the proposal to co-invest with IFC, what are the identified projects here, and what projects of yours are currently with them?
So we have we did three projects with IFC. One is Ashiana Daksh in Jaipur, which is more or less completed, and we have returned with returns most of the capital back there. And we have Ashiana Amara in Gurgaon and Ashiana Vatsalya in Chennai, where IFC has co-invested with us. And the second platform, we have working on a few projects. Nothing has been identified yet, because we typically look to deploy in new projects with them. So as in when we pick up a project, they will invest in themselves. We have term sheets and we are in advanced negotiations in projects, but nothing concrete as yet.
All right. Thank you, Varun, for joining in, giving us an outlook on the year ahead as it looks like to you right now. Over 2,000 crores on the top line, led by a mix of both realization and volume growth, with an increased focus of revenue coming in from senior living. We'll await some more details on the expansion that you're planning in all parts of the business that you operate in. Thank you for joining in. The stock up around 1.5% as we speak, has seen a decent traction over the last couple of months or so. Take a short break, come back, get